Investment companies are normally owned by outside shareholders, but when Jack Bogle founded Vanguard in 1975, he made a revolutionary decision. He structured Vanguard to be owned by its own funds, which means it's owned by its investors. So instead of paying dividends to external shareholders, he wanted to redirect the profits to the investors in the form of lower fees. This unique ownership structure is what sets Vanguard apart and puts investors first worldwide. Hi, my name is Nabeel, and in today's video we'll be discussing some of the lesser well-known facts about Vanguard's index funds and ETF investments. It may also give you more insight on Vanguard and help you understand why Vanguard are the way they are. Jack Bogle founded Vanguard in 1975, and in the 1970s he wasn't a popular man on Wall Street. He preached a philosophy of steady investing and keeping things simple, and that you don't need to have a high-priced broker or fund manager to do that for you. He helped bring investing to the masses by popularizing the index fund. Index funds don't pick individual shares or bonds to beat the market, they track the performance of the entire market. Or as he put it, don't look for the needle in the haystack, just buy the haystack. Instead of paying high fees to fund managers or experts who claim they can find you a good company to invest in, Jack wanted a way to invest in the whole market at once, reducing both complexity and fees. So when you invest with Vanguard, you're buying into the investment principles of Jack, and his top priority from the very beginning was to put the investor first. Jack had been part of the professional investing business for many years, so he saw firsthand how much these money managers were ripping off normal people wanting to invest like you and me. And to put into perspective a little bit, when Jack passed away in 2019, it was reported that his net worth was around $80 million, with half of it going to charity. I know that's a lot of money because it is, but if you take into account the fact that Vanguard's assets under management at the time were around $5 trillion, his net worth would have actually been in the billions of dollars. But there's an interesting reason why he wasn't that rich, which kind of explains why the fees are so low. He was never the sole owner of Vanguard. To get an idea of why Vanguard is so unique, we have to look back to 1972 when the first index fund was created, but it wasn't actually created by Vanguard. In 1975, Jack Bogle launched the first Vanguard S&P 500 index fund, and even though he didn't come up with the idea of index funds in general, he made them one of the most popular investments that we all know today. And it's obvious how successful they've become now, but back then index funds were a very unpopular idea. People laughed at him because no one wanted to accept average stock market returns every single year. Professional stockbrokers and individuals were only interested in beating the stock market. People still try this today, so nothing really has changed. Now Vanguard does offer actively managed funds today, but that's mainly because they want to give their investors options, if that's the way they choose to invest. So even though the company was built on index funds, they still offer those actively managed funds as well. As we know, Jack gave up billions of dollars in net worth. The main reason for that is because he has never been the sole owner of Vanguard. He always said the people and customers are the owners of the company. And here's a clip.
I'm doing fine, but I don't own Vanguard. I've never owned a share of Vanguard. But I've been paid a nice salary and a decent salary and nice bonus when I was running the place. So I'm not complaining, but I just don't have and never will have the kind of wealth that most people in this business have gotten because they've charged their investors too much for what they're worth.
Usually when someone starts a business, they own all or at least the majority of the company, since that person is taking most of the risk, and that person will be rewarded if it succeeds. From the very beginning, Jack set up Vanguard to be owned by the actual investors, meaning that when you own any shares of a Vanguard fund, you're considered an owner and shareholder of the Vanguard group.
Now here's your fund. It's run by Vanguard, and you own Vanguard. And Vanguard also runs a whole bunch of other funds, and we allocate the cost among those funds. There are now probably 165 of them. So the costs are allocated depending on the fund's own cost, depending on competition, depending on fairness, things like that.
If you want to know where the incentives lie within the financial industry, then all you have to do is look where the money goes and find out who actually owns the company. For Vanguard, the investors are the owners of the company, so the incentives are aligned with our best interest in mind, and that's because Jack thought that was the right thing to do. Fidelity, for example, is a private company owned by the founders, the families, employees and ex-employees, so the incentives are aligned with those groups of people in mind, and not someone who uses their fund. BlackRock, who offers the iShares ETF, is a publicly traded company, so their shareholders are their top priority. It doesn't mean they're bad companies for doing that, it just shows that the vision Jack had for Vanguard was unique and revolutionary, which showed how they wanted to be different. Jack said, "My ideas are simple in investing, you get what you don't pay for." Since Vanguard investors own the actual company, the benefits of that ownership comes in the form of some of the lowest fees in the industry. Other mutual fund companies are trying to turn a profit, so that the owners can benefit. Vanguard is taking all that would-be profit and returning it back to their shareholders in the form of lower fees. Vanguard has 130 mutual funds and 76 ETFs, with an average expense ratio of 0.09%, while the industry has an average expense ratio of 0.54%. That's a cost of 90p versus £5.40 per £1,000 invested. Not only are Vanguard's expense ratios very low today, they recently came out and said how they plan to cut their costs on their investments by $1 billion over the next 4 years, which will make things much more cheaper. Vanguard is able to be at the forefront since their main goal is to return value back to you as their shareholders. But Vanguard weren't the first to get started with ETFs, and they held off to begin with on purpose. State Street launched the first exchange-traded fund, which tracks the S&P 500 back in 1993. Because they started early, it's one of the big reasons they currently have the largest assets under management of $449 billion, while Vanguard's total stock market ETF is sitting in a third at $296 billion in assets under management. Vanguard launched its first ETF in 2001, 8 years after the first ETF started trading. The main reason for holding off on this investment vehicle is because ETFs were looked at as a way to trade for the short term, which didn't align with Jack's goals. With ETFs, you can buy and sell them at any point in time when the stock market is open, just like you can with an individual stock. On the surface, this might not seem like a big deal, but it is when you realize that so many investors are more likely to panic sell when stocks are down in the short term. On the other hand, with index funds, what Vanguard is known for, trading is actually done at the end of each day. If you place a trade for an index fund in the middle of the day, then the shares won't actually be bought or sold until the market has closed for that day. As time went on, Vanguard realized their investors wanted more access to this type of investment, so they started creating ones that mirrored their index funds. This is why they offer something like the Total Stock Market Index Fund and the ETF version of the Total Market Index Fund. Vanguard was hesitant to add ETFs early on because the company's values stem from their founder Jack Bogle. He's a firm believer in buying and holding your investments to avoid the short-term turmoil that we all see in the stock market on a day-to-day basis. In Jack's eyes, true wealth is better created over the long term as opposed to a get-rich-quick strategy that most people are hoping for. Thanks for watching, and if you'd like to learn more about some of the different index funds I use, you can check out this video here.